Evening. Thank you for standing by. Welcome to Tencent Holdings Limited 2023 second quarter results announcement webinar. I'm Wendy Huang from Tencent IR team. At this time, all participants are in a listen-only mode. After the management's presentation, there will be a question and answer session. For participants who dial in by phone, if you wish to ask a question, please press 5 on your telephone to raise your hand. If you are accessing from the Tencent Meeting or Zoom Meeting application, please click the raise hand button at the bottom left. And please be advised that today's webinar is being recorded. Before we start the presentation, we would like to remind you that it includes forward-looking statements, which are underlined by a number of risks and uncertainties, and may not be realized in the future for various reasons. Information about general market conditions is coming from a variety of sources outside of Tencent. This presentation also contains some unaudited non-IFRS financial measures that should be considered in addition to, but not as a substitute for, measures of the group's financial performance prepared in accordance with IFRS. For a detailed discussion of risk factors and non-IFRS measures, please refer to our disclosure documents on the IR section of our website. Let me introduce the management team on the call tonight. Our Chairman and CEO, Pony Ma, will kick off with a short overview. President Martin Lau and Chief Strategy Officer James Mitchell will provide a business review and update on our progress on some strategic growth drivers. Chief Financial Officer John Lo will conclude with financial discussion before we open the floor for questions. I will now pass it to Pony.
Okay, thank you, Wendy. Good evening. Thank you everyone for joining us. During the second quarter of 2023, we sustained a solid revenue growth rate, along with the gravitation toward higher quality revenue streams with better margins. This transition, combined with the careful cost discipline developed in the previous years, resulting in profit growth exceeding revenue growth. We achieved a notably rapid growth in advertising revenue, benefiting from deploying machine learning on our advertising platform and from video accounts monetization. Now let me go through the headline financial numbers for the quarter. Total revenue was 149 billion RMB, up 11% year-on-year, or down 1% quarter-on-quarter. Gross profit was 71 billion RMB, up 22% year-on-year and 4% quarter-on-quarter. Non-IFRS operating profit was 50 billion RMB, up 37% year-on-year and 4% quarter-on-quarter. Non-IFRS net profit attributable to equity holders was 38 billion RMB, up 33% year-on-year and 15% quarter-on-quarter. Turning to our key services. For communications and social networks, combined MAU of Weixin and WeChat grew both year-on-year and quarter-on-quarter to 1.3 billion, with increased synergies among video accounts, mini programs, and moments. For games, we released 2 high-quality PC games in China, our most important PC game launches since 2015. In generative AI, we are internally testing our own proprietary foundation model in different use cases and are providing Tencent Cloud Model as a service solutions to facilitate efficient deployment of open source foundation models in multiple industry verticals. I will now hand over to Martin and James for business review.
Thank you, Pony. And good evening and good morning to everybody. For the second quarter of 2023, our total revenue was up 11% year-on-year. VAS represented 50% of our total revenue, within which social networks subsegment was 20%, domestic games subsegment was 21%, and international games was 9%. Online advertising was 17% of total revenue, and fintech and business services was 32%. For value-added services, the segment revenue was 74 billion RMB, up 4% year-on-year. Social networks revenue was up 2% year-on-year to 30 billion RMB, driven by increased revenue from mini games and music subscriptions, which was partially offset by lower revenue from music and games-related live streaming services. Long-form video subscription revenue decreased 2% year-on-year. Video subscriptions declined 5% year-on-year, but increased 2% quarter-on-quarter to 115 million, benefiting from our original animated series and drama series. We're consistently upgrading our content production capabilities. For example, we're now applying Unreal Engine for producing animated content such as our series, The Land of Warriors, in order to streamline the workflow and enhance production capacity and efficiency. Music subscription revenue increased 37% year-on-year, as both ARPU and subscriptions grew at double-digit rates year-on-year. TME has enriched its subscription offerings in terms of membership privileges and content, and in June, our music subscriptions count achieved a record high of 100 million. Domestic games revenue was stable year-on-year at 32 billion RMB, partly due to less commercial content scheduling for our biggest games after a very robust first quarter. Revenue from our relatively new and growing competitive esports games, Arena Breakout and Fight of the Golden Spatula, increased. International games revenue increased 19% year-on-year, or 12% in constant currency terms to 13 billion RMB, benefiting from the robust performance of Valorant, Nikke, and Triple Match 3D. Moving on to communications and social networks. Weixin total user time spent increased healthily in the second quarter, benefiting from greater engagement across video accounts, mini programs, and moments. Video accounts expanded its user base and deepened user engagement. Total time spent almost doubled year-on-year in the second quarter, driven by double-digit growth in DAU and much faster growth in terms of per user time spent. Meanwhile, we achieved strong growth in user interactions such as likes and comments. We are strengthening our content ecosystem by facilitating a thriving creator community, as daily active creators and daily video uploads sustained robust year-on-year growth in the second quarter. We're providing tools which help creators scale their video accounts presence while also contributing to our ad revenue growth. Building on deeper user engagement and a stronger content ecosystem, we're making significant progress in expanding monetization opportunities within video accounts. For advertising, we're in the early stages of establishing a significant revenue stream with high incremental margins. We believe there's still very substantial revenue potential to be realized going forward. Live streaming e-commerce, which is still at early stage of development, achieved 150% year-on-year GMV growth in the second quarter, providing an opportunity for us to create a new high-margin commission-based revenue stream. During the quarter, we upgraded our consumer shopping experience and boosted repeat sales for merchants by sourcing more branded products, introducing shipping return insurance, and upgrading customer service functionalities. Turning to mini programs, we're now serving more than 1.1 billion users on monthly basis, and their engagement grew significantly as time spent per DAU increased double-digit year-on-year in the second quarter. 4 million developers participate in our mini program ecosystem, offering a breadth of mini programs ranging from public services and productivity tools to AI-powered photo editors. Today, I would like to walk you through our recent success in mini games as a vertical use case example. Mini games engage over 400 million MAU and 300,000 game developers build upon the mini program framework. Both leading game companies and smaller studios actively develop and operate mini games, including casual games, card games, and many other types of games. In the second quarter, more than 100 mini games each achieved quarterly gross receipts of over 10 million RMB. The strong growth of mini games demonstrates our compelling value proposition for developers. Firstly, for developers with innovative game concepts, we help them to reduce entry barriers and launch costs. They can build a user base through social sharing, pre-existing login, and instant play infrastructure offered by the Weixin ecosystem. Secondly, for developers with successful app games, we enable them to extend their reach to a new audience of non-app users by porting to mini games. Thirdly, developers can benefit from advancement in mini games infrastructure, leveraging our know-how and game technology. For example, our infrastructure can now support sophisticated genres such as shooters with fast loading and smooth gameplay. Minigames also provide Tencent with significant strategic value. First, through minigames, we host the largest casual game community in China with hundreds of millions of MAU, substantially exceeding the MAU of the largest app-based casual games in the market. Second, minigames allow us to expand our audience base and cultivate new gamers. Over 50% of minigames MAU do not play Tencent app games, and half of minigames MAU are female. Finally, minigames provide us with game distribution and ad revenues characterized by high margins and platform economics, as opposed to hit-driven dynamics. From a reporting perspective, we report net platform fees to Tencent instead of gross user spend as revenue, and we allocate these fees to social network subsegment instead of games subsegment. Therefore, growth in third-party mini-games does not benefit our game segment revenue, but flows through to our VAS segment in the form of high-margin revenues. Developers can also buy advertising and contribute to our advertising revenue. With that, I will now hand over to James to talk about the other business updates.
Thank you very much, Martin. For domestic games, our mobile and PC game MAU and DAU each increased year-on-year in the second quarter. After releasing highly commercial content in the first quarter, we reduced such releases in the second quarter. Based on trends quarter to date, this reduction was a temporary phenomenon, and we believe our domestic game revenue should resume year-on-year growth in the third quarter. Taking a longer view, 3 of our new game launches in the past 2 years, Fight of the Golden Spatula, Arena Breakout, and Wild Rift, have been steadily building their user bases, and each ranked among the top 10 mobile games from all developers in China by total time spent in the second quarter. While different new games from different developers show up in the top download and top grossing charts from month to month, we're more focused on cultivating evergreen successes, for which the trend in total time spent is a better leading indicator of longevity as well as long-term revenue generation. For example, Fight of the Golden Spatula achieved a new milestone of 15 million daily active users in June and ranked 4th by total time spent across all mobile games in China in the quarter. Arena Breakout also achieved record DAU in the second quarter and ranked 8th across all mobile games by time spent. As a high production value extraction shooter on mobile, we believe Arena Breakout is the first of its kind globally, and we launched the game in international markets from July. Meanwhile, a number of our existing long-life titles demonstrated their ongoing vitality. Naruto Mobile, which we launched in 2016, achieved all-time highs in gross receipts and average DAUs in the second quarter, driven by engaging gameplay, additional stories, and attractive new characters with distinctive combat techniques. Despite multiple competitive launches over the years, Naruto Mobile is the clear China leader in the fighting genre. Dungeon & Fighter released the 15th anniversary content update in June, featuring a more contemporary anime-type art style and improved combat visuals. As a result, DNF's average DAU increased by a double-digit percentage year-on-year in June. While the second quarter was a quiet period for new mobile game launches for us, we have recently launched 2 big PC games in China, which will begin contributing to revenue in the third quarter. Valorant, a top tactical shooter in international markets, was our most successful PC game release ever in China, measured by the number of active users on launch day. Among all games released since 2019, Valorant is the most viewed game on the leading live streaming platforms. Lost Ark is currently the most played MMO action role-playing game on Steam, with a thrilling combat system, captivating storyline, and vast game world exploration. Since we launched Lost Ark in China in July, the game has become the most popular MMO game on live streaming platforms in China. Turning to international games, we saw ongoing growth from PC games, signs that the post-pandemic dip in activity is moving behind us in mobile games, and positive contributions from certain recently released games. Valorant continued its strong performance with DAU and gross receipts increasing year-on-year, fueled by the introduction of popular new agent Gecko, appealing items including weapon skins, as well as a new game mode Premier that offers a professional tournament experience. After a lengthy post-pandemic consolidation period, PUBG Mobile returned to year-on-year growth in DAU and gross receipts in June, driven by an upgraded Royale Pass system, a new dinosaur-themed game mode, and successful brand collaborations with Bearbrick and Ducati. Since its launch in November last year, Nikkei has increased user engagement through popular content updates, including new premium characters, added storylines with fully voiced scenes, and successful thematic events. For online advertising, revenue grew 34% year-on-year to 25 billion renminbi. While our growth rate certainly benefited from comparison against a pandemic-depressed period a year ago, we believe we outpaced the overall industry, which we attribute to enhancements to the machine learning systems powering our ad platform, as well as robust demand for video accounts ad. Advertising spending with us grew at a double-digit year-on-year rate from every major advertiser category except transportation. On Weixin, video accounts ad revenue exceeded 3 billion renminbi in the second quarter. More broadly, the deployment of commerce tools, such as discovery of live streaming commerce and digital shops within video accounts, contributed to the vibrancy of Weixin's overall commerce ecosystem, attracting merchants and brands to allocate increased ad budgets across multiple Weixin properties. Consequently, during the quarter, ad revenue increased year-on-year not only for video accounts, but also for moments, mini programs, and official accounts. For content platforms, our music ad revenue grew notably year-on-year, driven by ad-supported music service, as well as brand sponsorship of offline music events, including TME's Wavemaker event. Our mobile ad network revenue increased significantly year-on-year, benefiting from partnerships with apps with high commercial value inventory. We upgraded our mobile ad network's infrastructure, enhancing efficiency and matching advertisers' demand with traffic supply and delivering higher ROIs for advertisers. Looking at fintech and business services, segment revenue was 49 billion renminbi, up 15% year-on-year. Starting with fintech services, for commercial payments, daily active users and transaction per user both increased year-on-year, and online and offline payment volumes grew year-on-year at similar rates, as consumption spending generally picked up. Our wealth management business experienced healthy growth in the second quarter as we enhanced our investor education and services, and users and AUM increased year-on-year. On the regulatory front, we have completed self-inspection and corresponding rectification for Tenpay and upgraded the compliance capability of our payment business. We look forward to progressing our business and providing innovative services under the supportive regulatory framework. For business services, year-on-year revenue growth returned to a low double-digit rate in the quarter, driven by fees collected on video accounts, live streaming commerce transactions, plus modest growth of cloud services. Cloud services revenue benefited from increased spending by industries such as finance and automotive. Business service gross margin increased notably year-on-year due to cost optimization as well as the new fee-based revenue streams. Within cloud services, we launched model-as-a-service solutions. Leveraging our proprietary vector database and high-performance computing clusters, we're enabling enterprises in multiple industries, including tourism and public services, to develop customized large models at higher efficiency and lower cost. And I'll now pass to John.
Thank you, James. Hello, everyone. For the second quarter of 2023, total revenue was 149.2 billion RMB, up 11% year-on-year. Gross profit was 70.8 billion RMB, up 22% year-on-year. Net other losses were 0.2 billion RMB, mainly due to compliance-related costs, partially offset by net gains from dim disposals and disposal of certain investee companies. Operating profit was 40.3 billion RMB, up 34% year-on-year. Net finance costs were 3.4 billion RMB, up 82% year-on-year. This increase was due to forex losses this quarter, versus gains in the same period last year, along with higher interest expenses. Share of profit of associates and JVs was 1.2 billion RMB compared to share of loss of 4.5 billion RMB for the second quarter of 2022. On a non-IFRS basis, share of profit was 3.9 billion RMB, improving from share of loss of 1 billion RMB last year. This was due to better profitability among certain domestic associates, driven by their revenue growth and improved cost efficiency. Income tax expense increased by 144% year-on-year to 11.1 billion RMB due to pre-tax profit growth, increased withholding tax provision, and a true-up of deferred tax adjustment related to an overseas subsidiary. IFRS net profit attributable to equity holders was 26.2 billion RMB, a 41% year-on-year. Diluted EPS was 2.695 RMB, a 41% year-on-year. Now I'll share our non-IFRS financial figures. Operating profit was 50.1 billion RMB, up 37% year-on-year. Net profit attributable to equity holders was 37.5 billion RMB, up 33% year-on-year. Diluted EPS was 3.875 RMB, up 34% year-on-year. Moving on to gross margins. Overall gross margin was 47.5%, up 4.3 percentage points year-on-year. By segment, gross margin for VAS was 54%, up 3.4 percentage points year-on-year, driven by high-margin game-related revenue, including those from mini-games. Increased music subscription margin due to subscriber growth and ARPU expansion, and cost efficiency improvements across our digital content services. Gross margin for online advertising was 48.9%, up 8.3 percentage points year-on-year, due to increased mix of high-margin video accounts at direct revenue and improved cost efficiencies. Gross margin for fintech and business services was 38.4%, up 5.1 percentage points year-on-year, reflecting cloud services cost optimization and high-margin revenue from video accounts live streaming e-commerce transactions. On operating expenses, selling and marketing expenses were 8.3 billion RMB, up 5% year-on-year and representing 5.6% of revenues. R&D expenses were 16 billion RMB, up 7% year-on-year. G&A expenses excluding R&D were 9.4 billion RMB, down 16% year-on-year, mainly due to reduced staff force, including share-based compensation expenses. At quarter end, we had approximately 105,000 employees, down 6% year-on-year or 2% quarter-on-quarter. Let's look at our operating and net margin ratios. For the second quarter of 2023, non-IFRS operating margin was 33.6%, up 6.2 percentage points year-on-year. Non-IFRS net margin was 25.9%, up 4.3 percentage points year-on-year. To conclude, I will highlight some key cash flow and balance sheet metrics. Total CapEx was 4 billion RMB, up 31% year-on-year. Within total CapEx, operating CapEx was 3 billion RMB, up 43% year-on-year, driven by increased investment in GPUs and servers. Non-operating CapEx rose by 6% year-on-year to 1 billion RMB. Free cash flow for the quarter was 29.9 billion RMB, up 34% year-on-year, due to increased operating cash flow and decreased payment for CapEx. Net cash position was 17.7 billion RMB, down 44% quarter-on-quarter. The sequential change was mainly due to dividend payments and share repurchases during the quarter. Thank you.